Vivek Gupta, who's joining us from KPMG. A very good evening, Vivek. Thanks for making the time for speak to us and helping us understand this big development, as it would seem, because now that you can do away with that contentious clause, as reports are suggesting, of dual listing that required a company to list in India and overseas, a company now can list in any of the 7 markets that are indicated. That includes the US, the UK and Japan. So what, in your understanding, will be the biggest benefits of this? How strong a message does it send out to the world that India is open for business at a time that China has such a headway as far as a big lead is concerned when it comes to Chinese companies that have already listed abroad?
So look, first of all, I think we are all awaiting the guidelines with bated breath. This was an announcement made by the Ministry of Finance some time back, and I understand the government is working on the final set of regulations. So until this is confirmed, this is not really confirmed news. But the way we look at it is, I don't think there is any option for the government here. I think a contemporaneous listing in India or a dual listing in India actually renders the whole direct overseas listing route pretty much ineffective for two primary reasons. One, companies will find it really hard to comply with disclosure norms here, governance norms here, as well as another set of regulations in the foreign stock exchanges. Second, from a value discovery standpoint, I think it's really difficult where you have value discovery happening on an Indian market, which is not quite so deep, and then happening also on an overseas stock exchange. And some of our prior ADR, GDR listings that you referenced actually demonstrate that. So it is very essential. It's almost a point to say this direct overseas listing route is feasible only if we don't mandate an India listing. So I'm very encouraged if these reports that it will directly be an overseas listing alone and it will not mandate an India listing either now or within a defined period of time. The government has toyed with various models on this. I'm really encouraged by the fact if this report is true, then that would actually make this direct overseas listing route a reality.
Fair enough. But when I ask you specifically about startups and a big challenge for them, the companies that have been looking to go public, Vivek, in India, it has been about the market regulators clause, SEBI's clause that asks companies filing for an IPO to maintain that minimum average operating profit of 15 crore rupees, and that too for 3 consecutive years. For a global listing, a company still needs to be profitable. It needs to report operating profits for the 3 preceding years, and this, all of it, of course, going by reports, or they have to have paid up capital funds in the security premium account. And besides, of course, they need tangible and intangible assets above a prescribed value. We are still waiting for details on that. So how conducive are these rules, as it may seem optically right now? Because yes, the final word is awaited. The government needs to take a call. It needs to be notified. But how conducive are these rules going to be for global listings, especially for startups?
So look at it this way. I think a global listing for an entity with an enterprise value of below $1 billion is perhaps not economically also very feasible. So I would imagine that entities with at least an enterprise value of $1 billion or more will be approaching foreign stock exchanges under this route. I do not think so. On the overseas exchanges, there are hardly any rules which mandate profitability. There are rules around disclosures. And of course, those rules are very, very strongly enforced. And so long as you disclose to the investor class as to what your company is about, what your prospects are on the roadshows, you will or will not get a listing, depending on investor response. Insofar as the India guidelines are concerned, I would expect that the government will be reasonable and will understand that under this route, there will be companies that may today be in a loss situation, but have either captured or are slated to capture large parts of our Indian market, and therefore will be profitable going forward, and in any case are immensely valuable. I don't see why the government will come out with a restrictive set of guidelines to say, I will only allow a particular type of company or a company which meets certain profitability norms to be eligible to list. So I think there will be some mechanism, even today for an India listing, You either need a profitability requirement or you need qualified institutional buyers to subscribe to your issue up to a certain limit. I think there will be a similar rule pattern for even Indian entities seeking direct overseas listing on stock exchanges. And therefore, I think it'll finally work out.
A lot of startups, we're talking about the likes of a Delivery or a Zomato or a MobiKwik or a Policy Bazaar, all have been gearing up to go public in India, of course, but a listing is going to bring up the credibility of their current valuations. That could happen in a big way, and this would change the landscape of how valuations are viewed for Indian startups in general, don't you think?
Oh, absolutely. So I think this move is a huge positive. So there are 2 or 3 things that will immediately happen. So number one, I think this move has the ability to make Indian entrepreneurs actually take their business global. The Indian markets are not deep enough, and Indian markets also do not ascribe valuations to certain categories of assets. Overseas, there are markets like NASDAQ and other exchanges where these kinds of assets are very well understood and therefore more fairly valued. So I think the one big advantage is Indian assets will start to get higher value simply through an overseas listing. So that's one advantage. The second obvious advantage is ultimately the playing field of most of these companies is India. So therefore, whatever capital they raise in whatever jurisdiction, US, UK, Japan, etc., all that capital will finally find its way into India, and therefore the whole economic cycle of investment, the whole economic cycle of money being used, and that whole cycle of prosperity in a way starts turning. So that's the second advantage. Our estimate actually is that this move alone, if done well, could bring more than $10 to $12 billion into the Indian economy in a relatively short frame of period. Our estimate also is that there are potentially between 50 to 100 companies in India which could be ready to use this route within the next 36 months. So it's not a small number of companies, it's not a small amount of capital. And therefore, I think I applaud the government's attempt to get this absolutely right. And if they come up with guidelines that make it economically feasible, we could unleash a fair amount of capital in these areas.
What about the government's push on FDI as far as the smallest Chinese holding is concerned? Because there is news on that count as well, Vivek. It's a significant development where FDI, even with the smallest Chinese holding, is likely to need a government nod. Earlier, the proposal was to set a floor for significant beneficial ownership. Now, how do you see the fallout of this stringency on any kind of Chinese FDI? Earlier, the option was to put up a threshold of either 10% or 25%, but not so now. Now, Chinese companies like Tencent and Alibaba, which have significant interest in Indian startups, in the light of that, do you expect a big shakeup to happen because of this? Help us understand the implications of this move by the government.
See, that's an interesting question. I don't think the last word on this has been said. I don't think the policy is also very much cast in stone. I don't know whether reports of the government wanting to evaluate even the last 1% of Chinese holding are correct or not. In view of national security concerns, the government took a call that Chinese investment, and as you very correctly pointed out, above a threshold beneficial interest limit, should come in with India approval. I think the government has subsequently, I'm not aware of any approval that's been granted, but I think the government has now set up a committee which will look at these applications expeditiously. So let's wait and watch as to how this pans out in the next 3 to 6 months. I'm hopeful that we will evolve. We as a country will evolve a mechanism where money can, or valid money can still come into India without too much fetters, and at the same time balance national security considerations. It may be a little bit more ticklish where there's a Chinese trick. But let's say if there's private equity funds or venture capital funds which have non-controlling LPs from a variety of jurisdictions, including China, I think the government will find a way to be able to either grant approvals or come up with a policy regime which doesn't unnecessarily stifle investments. That's my hope. I think it's very early on yet to speculate on exactly where this will go. And I understand there's uncertainty around this for the last 3 months or 4 months. But I think this will sort itself out by probably end of this calendar year.
But Vivek, as much as I accept the point that, I mean, the final word is not out on this. This is a matter under consideration, but the significant, just to play the devil's advocate, the significant beneficial ownership threshold, that would have possibly blocked Chinese entry, whether it's through Singapore or even a Mauritius. How do you think that's going to be looked into as far as options before the government are concerned? Because it would mean big amendments to the Companies Act, to FEMA, since all FDI changes are notified under FEMA. So you're talking about that kind of shake-up. This is going to be changing things at a rather grassroots level, don't you think?
No, so you know what? Perhaps not. I think the existing framework, so the government has already notified one guideline under the NDI, non-debt instruments norms under FEMA, right? And that guideline is effective at this point in time. The government has also amended the FDI policy. So insofar as legal amendments are concerned, I think we are at a point where a basic enabling framework has been provided to the government. I don't expect to see, for example, amendments in Companies Act on this basis or any such thing. The key point that was being discussed is to make these guidelines fully effective, should we be looking at the significant beneficial ownership test under the Companies Act or under the PMLA? You would note that for sourcing norms, the government has already provided, for government sourcing norms, the government has already provided some indication there. And you seem to now suggest, and I haven't yet seen any official paper on this, but you seem to now suggest that the government is saying, I don't want to go by the 10% Companies Act norm. I don't want to go by the 25% PMLA norm. And I will simply say, if you have Chinese beneficial interest, I will look at it. That's what the fear is. I think that if the government comes up with a fair and expeditious policy mechanism to say that we will grant approval in ABC type cases, non-sensitive sectors, or sectors where the Chinese beneficial interest is entirely non-controlling. They can still maintain control. They can still figure out what the color of the money coming into the country is. But if there is reasonable certainty amongst the business fraternity as to what kind of application will get approval and what kind of investment application will not get approval, then I think it's just a process. And that's what I mean when I say that these things will, I'm very hopeful, will get sorted out in the next couple of months by December 31 of this year. That's what I'm hoping.
Yes, absolutely, Vivek. We'll hope for clarity to come in soon. But that's the big story that we are tracking over here this evening. Vivek Gupta from KPMG. It's such a pleasure talking to you this evening and getting your perspective on this as well. Two significant developments that are in the works right now. The Ministry of Corporate Affairs and the Department of Economic Affairs have decided to do away with the contentious clause of dual listing that required a company to list in India and overseas. So that has been done away with. A company can now list in any of the 7 markets indicated, and that includes the US, the UK and Japan. And also on a significant note, FDI, even with the smallest Chinese holding, is going to need a government nod. This is as per reports, both of these news. The final word is not out yet. This is going by news report. Earlier, the proposal was to set a floor for significant beneficial ownership. We'll see exactly how these stories develop. For the moment, we'll take a very quick breather on this edition of Startup Central, and then we'll get you the latest on how Amazon's big sale is going. More details on the flip side with several other stories in the startup universe. To stay with us.